In this video, I'm going to walk you through my new Leaps option position, which is on FuboTV. And what we're going to go through, we're going to go through the position I've got on, how big I want this position to get, what is the potential profit and loss on this position. Then we'll go into a couple of reasons why I've decided to go into Fubo. And if you like the sound of that, all I ask for is that you smash that like button and don't forget to subscribe. So we've got option strat here. Again, I use option strat to really visualize options trades and opportunities that I see there in the market. I'll leave a link down below. You can create a free account. So for those who are new and don't know what a call is effectively a long call option that is greater than 6 months. That's all it is. It's just a long call. So what I've done, and you can see here, Fubo is trading at $3.36. So it is quite a low value stock. You know, back in the hype in 2021, this stock went all the way up to 50 odd dollars, 60 odd dollars, whatever it was. And then came crashing down in the whole bubble of these hyped non-profitable stocks. But throughout that whole period, you know, Fubo's taken a bit of a battering. It's got all the way down to $1 and now it's up to, you know, $3.36. That's a 300% return in itself. So I've been quietly getting contracts behind the scenes and I've been updating my position inside option strat. So I've got 4 calls expire. So you can see here, I've got FuboTV. I've got the $2.50 call ending on the 15th of January 2027. So that's just under 2 years away. So it's quite a long leap option with a quantity of 4. So my average cost in this position for each contract is $1.76. And you can see here between the bid and the ask that even if you just take the worst case scenario at the moment, it's I could sell this option back for $1.76. So you can see on this one, the unrealized P&L at the moment is $70 or $9.10%. So the total I paid for the 4 contracts is $704. And predominantly I sell options on this channel, but for those who are interested in long calls, the max you can lose on a long call or any call is the debit that you pay, so the $704. So that's the position. So again, 4 contracts, average price 176, currently trading around the 163. I'm down 10%, and the total I've put into the account is $704. Now, if you look at it on a graph, it is very, very simple, where your profit is infinite because Fubo can go to the moon, as you can see here, by the infinite, and the max loss is $704, which is the total net debit that I've paid to acquire the 4 contracts. Chances of profit, because I am down slightly 10%, is 40%. So again, roughly when you do a call or when you buy a stock, if it goes up or down, again, all else being equal, it is a 50-50 shot, which is why I like to sell options, because we can get that probability up to 80-90%. And you're taking small profits, but often. My break even is 27% away, so $4.26, and that's pretty much all I want to show you kind of there. So as long as Fubo at the current rate state of play, if I don't purchase more contracts and lower that break even further, the cost basis, I need Fubo to get above 426 in just under 2 years' time. So if I go to the table view, what the table view is visualizes based on current implied volatility, how much profit I would make if or loss if Fubo goes down. So you can see here at the day of expiration, I'm pretty much capped at my 704, obviously because my call is at 250. So as long as it stays above 250, I'll make some of it back, but it's pretty much nothing. So if Fubo ends at $3, I'll lose $200 of my, well, I lost $500 on my $704, so I'll make $200 back. So that as a percentage is, you know, I lose 72%. So what I'm saying over here is that my risk is fairly low. Like, it's a $3 stock, right? If it goes, it goes, right? It is what it is. But if you look at it from a win-loss perspective, so if Fubo does go down 100%, I lose $704. But if it goes up 100%, let's call it $7 there, I make 1,096, which again at a profit and loss is a 156% return. So this is why I prefer leap options to buying the stock, and it's for two reasons. One, I'm controlling 400 shares of Fubo stock, and it's only costed me $704. So let's just say that, I got in at, I don't know, $3, let's say. So 300 times by 4 would be $1,200, where I've paid half of that to control the same amount of shares, because that's when the stock price moves up and down, because I've got such a high delta on this, because I've got the $2.50 call, I think it's at like 80, 85 delta, is pretty much moving alongside the stock. The second thing is, again, is not only is less capital, but it's more leverage. So as I said before, if Fubo goes up 109%, at the date of expiration early on, like, even if I look at it here, by November, if it doubles to 170, or at the day of expiration, 156%. So you can see here that I can make way more money leveraging options to get a better and higher return. Now, I'm targeting a $10 price target, which at the moment, at the date of expiration, is sitting at 326% return for a 200% gain. Now, the question is do I believe it'll get to $10? Do I believe it'll be less or more, and all these good things? So I'll put my case towards you and let you know. And then at the end, I will tell you how much I'm looking to buy into this stock over the coming weeks and months. So the first thing is if you guys haven't heard, that back in January, Disney decided to purchase or merge, however you want to determine it, Fubo, right? So Disney is merging its Hulu and live TV services with Fubo and acquiring about 70% stake in the combined entity. Now, that is a big deal. That is how Fubo got from $1 up to $3 based on just that announcement, right? So Disney is a powerhouse company, media company, all these good things inside there. They see value inside Fubo. And again, for those who probably should have explained what Fubo does. So Fubo is a streaming service predominantly around American US sports, televised out in Canada, US, Mexico, and kind of the North and South American countries, and some places inside Europe. So it is a way to not only get the top NBA, NFL, but it also does a lot of college games and things like that, which, again, I'm not from America. It's quite popular inside America. And Fubo is one of the only ways you can get access to those types of games. So Fubo has gaining its subscriber base, all these kind of good things as part of it. It is growing as a business, increasing its revenue. It's nearing profitability, all these kind of good stuff. And I think, again, the Disney merger will be the catalyst to getting Fubo from where it is now to up to 5, 6, 7, 8, 9, 10, or even beyond. Now the question is when is the Disney's merger date? When is this going to happen? So according to AI, looking at the reports and things like that, which is why I love Gemini and AI tools, it is looking to happen between January and July 2026. So we are in July 2025 as it currently stands. And this is now where I think the opportunity is to start buying up core contracts, because I've got it until 2027. So in case things get delayed or something's happened or it crashes and I buy some more, all of these kind of good things inside there, then I think I've got a good opportunity here to give it just over 2 years. So let this opportunity play out to get to the $10, the 15, the 20, whatever it decides to get to. And as these kind of, high volatile stocks, as we start coming out of tariff situations, all these other good things as well, when it's time for these small cap stocks to start rising, Fubo is also going to get a tailwind from that as well as the merger, the Disney merger comes in. Yes, there's talks about various things inside here. Like, I was seeing about, they've got some lawsuits and various other things, but what company hasn't, right? So there's a lot of FUD out there inside there, but let's not get away from it, that Disney see opportunity in FuboTV. The plan is to keep it as a separate trading entity, and therefore when that gets announced and that's complete, that is going to do a pop in the stock, hopefully, if it goes through. And then hopefully I can reap the benefits of that as I continue to hold this opportunity over the next year or so. Another reason why I like Fubo, even as a standalone company, let alone the Disney acquisition, which is probably going to fuel the growth even more, is I like to look at the DCF calculation. And you can see here that the discounted cash flow over the last 3 years, again, it's a very, very small company. We've got 41% discounted cash flow. It's sitting at $3.35, therefore giving the fair value around $10 to $11. Even if it's $5 or something like that, that's still kind of a 2-3x return in kind of what I'm looking to get out of this opportunity. And again, if we start looking at, EPS, again, $1.80, minus $1, minus 73 cents, minus 29, minus 27. So again, it is going inside the right direction in terms of its profitability, and also from its net income, its EBITDA there, currently sitting at a positive as well. And again, cash flow, again, also being positive. So again, there's a lot of things in terms of what Fubo are doing of increasing its subscriber base, trying to become more self-sustained and more profitable as time goes on. So this is the opportunity that I'm doing. Again, this is not financial advice, it's for entertainment purposes only, but this is what I'm looking to do. So the last question is how much am I willing to put into this opportunity? So at the moment, I've got $704 invested. Now my current portfolio is sitting just under 150,000. So I'm looking to do around 2 to 3K depending on where the opportunity is. So it's such a small amount of my overall portfolio, 1 to 2%. So even if I get there and get to those numbers, we're looking at a 3x opportunity here. 246, 6 to 8K is kind of a good opportunity there for something you only put $2,000 into over a year's span. So again, if we can get there, great. If we can get half of that and it's a 1x return or a 2x return, that's okay too. But again, if we can get something in the 3x plus, these are the opportunities that we want to get into. So again, 2 to 4% probably going to be the maximum looking to invest inside this opportunity. And if my account continues to grow through all the other good stuff that I'm doing, I might go buy another cheeky contract here and there, right? So keep on having a look at it. Again, do your own due diligence. This is what I want to do. People will think I'm crazy, but again, I can afford to do it. So it's something that I'm really interested in having an opportunity to. Again, for those who were in my SoFi one in my previous one, there again, so far I'm up even further on this one. I realized 93% on this one, and again, I had the opportunity to get in at 100. I think it was like $200 where it dropped by 50-60%, and then this one here would have been over 1,000 by that point. But we live and we learn. So not to say I couldn't buy another contract so far, but again, I'm really just flirting with leaps at the moment. So it's good to see this leap, nearly doubling inside value. So again, this is what I want to see inside Fubo. And again, I'll start looking at some of these things. Like I tend to sell puts at decent prices for stocks I want to own in the long term. But again, I'm going to start looking at potentially buying leap options when good value stocks are just getting beaten down, whether it's on a macro headwind or something happens from an earnings perspective, but we just feel like it's still the right position to play. So I'll leave it there. Looking good from my perspective. Just going to quietly start buying up some more call options. I'll keep you posted on the channel. So if you like this type of content, make sure you subscribe, and I shall see you guys in the next video.